ECIC, your export risk partner.
We look at economies broadly. So we look at major trends globally, because as you may know, economies are sort of integrated across the globe. So you could have a very innocuous event in a very remote part of the globe, and that would have a knock-on effect onto a country that we want to go into. An example is you can look at the trade wars, where one would say that Africa is very removed from that trade war, but at the end of it, you've got demand that is driving our exports, and this demand derives from these other countries. An example is countries like China, India. So when those countries have issues, Africa may look fine, but eventually we get affected. I speak specifically of Africa because Africa is our biggest export destination in terms of our portfolio. So African countries predominantly are commodity dependent, and these are taken to countries like China, India, for further processing for exports into the first world. And if there are trade tensions, we may not be in the mix of it, but the knock-on effect finally gets into Africa and subsequently into South Africa's capability to export it to Africa.
And what about intra-Africa risks? We have trading, we now have the Africa Free Trade Agreement, true, but there are some trading tensions between countries often.
True, that's a fact that we are alive to. Africa, as you are aware of, is predominantly dependent on previous colonial powers for trade. The Portuguese tend to take care of the Angolas, the Mozambiques, the Cape Verdes of this world, and the French the same thing. So you find that trade in Africa, in as much as we are one continent, is still fragmented. We still have allegiance, so to speak, to the former colonial masters, and that tends to hamper trade between African states. So you'll find a country like Kenya, for example, will be doing an infrastructure project that will fit a South African exporter perfectly. But this infrastructure project may be outsourced to another, third-party country outside of the continent. So those issues are there. But I think the beauty is that after the signing of the Africa Continental Free Trade Area, the impetus to have Africans, trading amongst themselves has gone up a notch. And I hope it will not end up being just one of those other slogans, that have come up. But I think in this sort of decade and in this particular time in Africa, there's a strong push for intra-African trade.
How do we mitigate against risks in certain countries? For example, if a certain nation has a president or a large oil company that is under global investigation for corruption or anything like that, what do we then do to mitigate against such factors?
Corruption is a subtle component that is very difficult to guard against. However, we follow very strong governance standards in terms of environmental, social, and governance. And if we are exposed to a project or a transaction that has public figures who are involved, the level of scrutiny that we apply is a bit different. So in the banking sector, you talk of your customers. So we have the same standards in the ECA world. So we have to know who are the sponsors of a project, what are the sources of their funding, and we vet them against global databases to see, are they mentioned in other databases where they will have, corruptly acquired wealth. So we raise the bar in terms of our screening when it comes to an attempt to arrest corruption. We also have forums under the Ban Union where we've got an anti-bribery policy that is used or acceptable standard within the Ban Union family. And that lays out clearly what we can and what we cannot do, especially on matters of corruption.
ECIC, your export risk partner.